Neil Mills, the Chief Executive Officer of SpiceJet, joins us live from New Delhi. Neil, good morning. Thank you for joining us. Neil, what is a better way to look at your numbers? If I look at a year-on-year comparison, well, growth is back, profits have, your losses have gone down. But if I look at the sequential comparison, revenues are down and loss has expanded.
What are you referring to?
Well, if I look at your Y-on-Y numbers, losses have narrowed down by 25% and revenue has gone up by 31%. But if I look at a sequential comparison between what you've done between Q3 and Q4, the picture is entirely different.
Yes, but of course it would be. Q3 is a strong seasonal quarter and it's always the strongest quarter of the year. So to compare a weak quarter of the year to a seasonally strong quarter is not really a valid comparison. So you have to compare the same quarter this year versus the same quarter last year in order to really get a meaningful comparison, because otherwise it's like comparing monsoon to non-monsoon and saying, well, the weather's different. Of course it's different. So I don't think the sequential comparison one quarter on the next is very valid. I think it's more important to look at sort of things like the 23% year-on-year increase in revenue for the same quarter. Overall, on an annual basis, there's a 44% increase year-on-year in the revenue numbers. So I don't think you can really do it on a quarter-on-quarter basis.
Fair point. But Neil, why one would draw that kind of a comparison is because of one of your peers, that's Kingfisher Airlines' performance, and that being beneficiary to the rest of the industry. KFA's exit has helped you capture a greater market share and therefore the sequential comparison.
Well, not really. If you actually look at it, the January through to March quarter is now the weakest quarter of the year, because there is a huge focus in India on education, as we all know. So that's the period of the year when most of the exams are written. So people just do not do discretionary travel at all. So it's only really travel that's required rather than anything that's wanted. So that does definitely have a hit on yields and load factor. And that is just a seasonal issue year on year. So that won't change in the future either. You know, we don't see January to March next year being any better from an overall demand perspective. It's just seasonal.
Do you think the current quarter, which is Q1 of FY14, will be definitely better than Q4 of FY13? Because crude prices have come down and this is the holiday season. You can't complain the exams were on.
No, that's true. So this quarter is certainly always much stronger. This is the second strongest quarter of the year, and second only to the third quarter. So certainly this quarter will be stronger. And yes, fuel prices, the edge has definitely come off of those now. But we still see the artificially inflated pricing that we have seen in the past. So, but yes, it will definitely be better than the fourth quarter. It always is. So, but yeah, the demand this year is certainly showing to be good. And capacity has certainly come into the market slower than the demand that is actually there in the stronger quarters. So we're very comfortable with where we are this quarter.
Neil, traditionally, Q4 seems to be a quarter where your losses are the biggest. In Q4 FY13 too, other than an increase in your routine operational costs where fuel prices increased nearly 7%, your aircraft maintenance costs as well have jumped a good 45%. Is it then fair to assume that it is an accounting policy to book chunky costs in the fourth quarter like you did even in Q4 of FY12?
I don't think it's necessarily an accounting policy. I think it's just the reality, because with the complex invoices that come for, say, engine overhauls, it takes some time before they actually get reconciled. But obviously, the accountants don't have any more time beyond the end of March because it's the end of the year. So it just lands up that actually that quarter does get hit with the impacts of those costs. And I don't think it's an accounting policy. It just happens to be the way that things are. And I think that's not unusual. A lot of companies actually have the last quarter have costs which may have accumulated during the year, but they don't have any chance to wait till the next quarter or to wait for the reconciliation to happen. They have to be booked in that quarter. And we try to make sure that from an accounting point of view, we have a very clean policy, and we're not sort of adjusting the accounts in any shape or form. So we don't carry forward anything that can't be carried forward. If it has to be booked, we will book it through the P&L, so there's no unpleasant surprises in the future.
A word on your international business, especially in the light of two formidable alliances now, Tata and AirAsia and Jet and Etihad. What will happen to your international business? Do you see yields coming down there?
No, not really. I think those two businesses are very different. So the Jet Etihad deal, I think that will have more effect on people who fly further afield going west from the country. So there's only really one carrier other than Jet that does that. They will obviously take a significant impact from that. But we only fly as far west as Saudi Arabia. So you wouldn't, if there was a direct flight available, go via Abu Dhabi to Saudi Arabia if it's just too short. But if you're going to the US or to Europe, that's quite different. And the AirAsia deal, well, AirAsia will have the same limits as we do, which would mean 20 aircraft or 5 years of operation before the Indian operation can operate internationally. So I don't think that will have much impact on us from an international perspective.
But the Gulf route, which I've been told is the bread and butter route for most Indian airlines, will the Gulf route now get slightly more competitive? Are you concerned about that?
Not really. The majority of our Gulf routes are to places that have a point-to-point demand, and Abu Dhabi has a very limited point-to-point demand, which is why we actually withdrew our application to fly to Abu Dhabi. So you only go to Abu Dhabi really to fly further onwards from there going westward. And for us, really, we're actually flying the point-to-point traffic, particularly to places like Saudi Arabia and Dubai, and going forward Oman. So it's not really going to have that much impact to us. I think it's more the longer haul airlines that will have to worry.
Give us a sense of your current capacity utilization, and for FY14, what is your forecast for your total capacity utilization?
Well, we will continue to grow capacity, so we will add another 8 aircraft this year, all Boeing 737s. So our capacity will grow somewhere between 20 and 25% in the next 12 months. So we're still very positive about the future in India. We still think there's a huge amount of demand, but particularly our focus will be international and regional routes, because that's certainly where we've seen the demand is much better, and the cost base for those two areas are very different to metro, which is becoming prohibitively expensive to actually operate.
Neil, what's the revenue mix currently from your international and regional operations, and what sort of targets are you looking at in the future quarters?
For the end of the December quarter, we had 7% of our revenue came from international, and for the end of the March quarter, it was 11%. For the end of our end of December, we had 11% came from regional, and 16% came from that by the end of March. So you can clearly see that that's where the majority of our growth is coming from, both on the regional and the international. And that trend will continue in the next 12 to 18 months. So that's certainly see where we will continue to grow. So our domestic market share may decrease slightly, but that's okay. Doing more and more of stuff that doesn't make money doesn't necessarily make for very happy shareholders.
Right, Neil, I just want to understand some numbers from you. If crude prices, they go down by $1 per barrel, how will that benefit you? Similarly, if rupee appreciates by 1% against the dollar, how will that hit you?
It actually affects us significantly, because if you look at it now, last year's impact was 13% on the rupee. So the effect to SpiceJet's P&L was about 220 crores, was actually the impact merely of the weakness in the rupee. So obviously any small change in the rupee does make a huge difference to us. And oil, because we're now at 50% of our total costs, is actually driven by the oil price. Any small change in that will obviously be significant to SpiceJet. So that is two things that we see as a real positive. With the government's initiatives that are there now, we certainly would hope to see the rupee improve over the next 12 to 18 months. And oil certainly seems to have come off its highs, and there doesn't seem to be a lot of push for the price to keep going back up again. So certainly we see a lot of positives in both rupee and oil going forward. I think more so in oil than in rupee, but hopefully they will both go in the right direction.
Neil, now with AirAsia's planned entry into the Indian market, just a quarter from now, how do you see the industry dynamics shaping up? And is it going to be a big impact in terms of pricing and, competitive tactics?
Yes, I do, but I actually think it's going to be positive, because having another player come in who is competitive and logical is perfectly welcome. And I think it's not really the SpiceJet type carriers of the country that need to worry, but more the inefficient ones, because you will have another efficient carrier coming into the market alongside SpiceJet. And that will just increase the pressure on the inefficient carriers. So I don't see the risk really being for SpiceJet, but more for those that have cost-based issues of their own.
But will that only increase competition, maybe not for the Gulf route, but at least for the routes, when I say the Southeast Asian routes?
Well, the Southeast Asian routes are not going to be affected by the Indian operation, because the Indian operation will not be able to do international routes for 5 years. So the only international parts of AirAsia will be from what they can currently do anyway, which is from Indonesia and Malaysia. And that's not going to be affected by the Indian operation one way or the other. So I think it's more on the domestic point-to-point market where there may be more competition. And as I said before, logical competition is more than welcome.
Neil, rumors, they come and go, some of them die, but there is a persistent rumor that SpiceJet is open to selling a stake. There is no smoke without fire. Should we try and read it in between lines?
You can read between lines, but always I found reading between lines, there's not a lot of words there. But we will certainly see in the future where we land up. Yes, we are open to a stake or to a strategic partner, but it has to be the right deal both for the company and the shareholders. And we're in no great hurry to do any deal just because it's there. But we haven't said we're not open to a deal. We are. But we're not in a hurry to get it done now.
So at 36 rupees, you're not interested in selling out. Can I revisit that point?
That's not really the point. Obviously, we would like a better price than the current share value. And we would certainly expect the deal would be done at a higher value than where we are now. But that's not really the limitation. The limitation is more finding a strategic partner that thinks about the business the same way we do, and where both partners benefit from the relationship, and it's not just one way.
What's the kind of valuation that you're looking at in terms of, how much a capital requirement is right now, Neil?
We don't have any particular capital requirements as of today. And to ask me what value we would want to sell at is probably unfair, so I'm not going to answer that question.
What's a fair value for your stock right now? It's at 36.15.
That is where the market values it. I think once shareholders see more the long-term strategic value in SpiceJet, the value will appreciate. So I think you just need to give it time. Day-to-day values don't make that much difference. It's more the long-term perspective on the price that makes a difference to us and to the price.
To multiple global airlines, or at this juncture you are not engaged in any active conversation with anyone?
We're not in any active conversations as of today.
Okay. We'll really appreciate your time, and thank you for your wonderful insights. So glad you could accommodate this interview request.